Hello and welcome to this Friday's morning markets briefing. We've got lots to talk about, but firstly, the US and Britain prepare to launch strikes against Houthi rebels in Yemen, as well as that. US inflation comes in above expectations, outstripping forecasts, and does rise to 3.4% for December, as well as that Iran seizes Gulf oil tanker in new threat to Middle East shipping. We've got lots to talk about in the charts, also lots to talk about in the economic calendar. We'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it, make sure you subscribe. The first article to talk about, of course, is US and Britain in Yemen. Now, the US and UK are preparing strikes against Iranian-backed Houthi rebels. This follows the militant group ignoring Western warnings on attacking ships in the Red Sea. Now, we've been largely covering the conflict, of course, within Israel, between Israel and Hamas in the Gaza Strip. And we've been talking about the Houthi rebels in addition to that. Of course, the Houthi rebels are a Shia militia group funded by Iran, and they've been operating in the Yemeni civil war for quite some time now, I believe since 2014, but I could be wrong on that. But ultimately, they've been, one of the leading groups within that civil war, and they have allied themselves with the militant group, designated terrorist group Hamas, which is in the Gaza Strip currently in a fight against Israel. And ultimately, the Houthis did pledge their allegiance, but unlike Hamas, but also similar to Hamas, they are funded by Iran. But instead of, the kind of very, tough situation there obviously was for Iran to fund Hamas due to obviously logistics constraints. The Yemeni civil war, has enabled basically Iran to fund the Houthis quite extensively, and as a result, the Houthis largely do have a larger arsenal of weapons and missiles and helicopters, which of course Hamas do not have. And as a result, what we've seen from that is the Houthis attacking commercial vessels in the Red Sea. Now, of course, the Red Sea is a vital and extremely important trade route for Europe. Seeing, I don't know how many, but many, commercial vessels pass through that kind of channel every single day. And ultimately, that supplies much of Europe's, goods that are coming from elsewhere in the globe, from the east. And by cutting that off, by attacking these commercial vessels in the Red Sea, you are dramatically applying pressure, inflationary pressure to these European economies. You're disrupting global supply chains. And as a result, the US and Britain do seem that like they've had enough of it. They have warned, of course, the Houthi rebels before to stop, but the Houthi rebels have only responded with, if you try and stop us, it'll be all out war. So that is the current situation. Now, Rishi Sunak met with his cabinet last night on Thursday following a meeting of Britain's National Security Council, with insiders reporting Britain is acting a part of a US-led military coalition and is preparing to authorize strikes against Houthi targets. And according to US officials, the Pentagon has drawn up options for targeted strikes on Houthi positions in Yemen, including missile launch strikes and weapons depots. 5 US and UK naval vessels were in the Red Sea, and the other allied warships included some from France, which are also coordinating with the US-led coalition. So it is a coalition now building up alongside the US to strike these targets in Yemen. We've spoken about this before, but ultimately the fact that the Houthis have now rebelled against those warnings from the US and Britain does mean that we're likely now going to see the US and Britain strike Houthi targets within Yemen, imminently, basically. By the time this video may be out, we may already be seeing strikes in Yemen. That's how soon we're likely to be seeing these kind of strikes go ahead. So definitely keep your eyes on this topic. Most certainly, we'll be coming back to Iran and kind of the Houthis near the end. So make sure you stay around so you can see that. But the next article to talk about, is US inflation. Now, US inflation does outstrip forecasts, with US inflation hitting 3.4% in December, coming in above forecasts and dimming market expectations that interest rates would fall as soon as March. Economists in comparison had expected an inflation figure of 3.2%. Now, of course, we've been staying on top of the news in relation to the US economy, US inflation, US employment, and that sort of thing to, gauge a better understanding of the way the Fed will shape its monetary policy and how that will affect US equities and the dollar, of course. Ultimately, though, recently we've actually been hearing more of a dovish rhetoric from the Fed, with that more positive US inflation data coming out, showing that inflation data was coming in below expectations, beating forecasts, and representing a very dovish picture for the markets. It was showing that inflation had come down very, very significantly, and ultimately it meant that the Fed would have a greater ability, a larger kind of breadth to kind of bring down interest rates, and therefore enable the US economy to grow whilst inflation was low. And that's what we were expecting, and that's what markets were expecting, with markets even expecting interest rate cuts beginning in March. Ultimately, though, this inflation figure, which is shown to have come in above expectations, could settle those expectations, humble those expectations, and ultimately force the market to reckon with the fact that inflation isn't at its 2% target just yet, and it's going to be some time before the Fed can start lowering interest rates, with the core inflation rate figure also coming in higher than previously expected. US stocks fell following the data release, with the S&P and Nasdaq declining 0.4%, and that's obviously because this does represent a picture for the Fed, which is one that's more hawkish. This represents that US inflation hasn't calmed down as previously expected, and ultimately interest rates must stay higher for longer to establish that low level of inflation that the markets need, that individuals need, and businesses want. Now, the US 2-year yield moved higher following the data before reversing to 4.33%. Traders in the futures market only slightly reduced their expectations of a rate cut, with the Fed previously making clear they want to see inflation declining before cuts. And ultimately, we've highlighted this before, is that Powell, I believe in his last meeting, made sure to come out and basically say, you guys are expecting interest rate cuts way too soon. We don't have the data yet to decide whether inflation is low enough to start cutting rates or even start talking about rate cuts. Ultimately, though, his rhetoric was more dovish, which is why we did see this kind of sell-off in the dollar and rally for US equities ending off 2023. But still, that kind of repeated rhetoric from all of these central bank figures is that we need to kind of be slow, careful, and keep our eyes on the data, because data can change every single month when it is released. So keep your eyes on that. Now, this inflation data is likely to push back the clock for when rate cuts will start. Core inflation came out at 3.9%, which is slightly down but above expectations of 3.8%, with the month-on-month core inflation rate remaining unchanged at 0.3%. And that's the key one, though. And it's kind of why when we go into the charts near the end, we haven't actually seen that much moves on the dollar, is mainly because they do follow that monthly core inflation rate far more. And if we're not seeing any changes on that, ultimately the Fed's monetary policy and outlook isn't changing much either. So that's something to take note of course. Despite the higher than expected data, inflation fell steeply in 2023, with inflation now being near 2/3 from the peak in 2022. This news prompted Joe Biden to release a statement on the so-called inflation victory. So keep your eyes on this. Very important, of course. We'll be coming back to it near the end on the dollar and US equities. Next article to talk about, and last article to talk about, is Iran seizing a Gulf oil tanker. Now, this is kind of coming back to that first article we spoke about to do with Houthis and Iran, but ultimately this is a very significant issue which took place before the US and Britain did plan strikes in Yemen, but ultimately has led to this kind of increased level of world tensions that we're seeing right now. Now, Iranian forces boarded and seized an oil tanker off the coast of Oman. This comes as another threat to shipping in the Middle East, where global trade flows. Western countries have already signaled their retaliation to assaults by the Houthis, obviously that being the US and Britain. Now, the capture of the tanker on Thursday raises fears that Iran will attack also, and that's the key fear here, guys, is ultimately if Iran's starting to seize these Gulf oil tankers, will Iran just stop at this oil tanker, or will they start, doing the same thing as the Houthis and just attacking many of these commercial vessels? And we already know what's going to start happening to the Houthis as a result of doing that. So we really need to keep our eyes on these issues, as they could escalate greatly and as a result have vast impacts, of course, on the markets and the world. Now, the worry is that yesterday's actions by Iran could present that the Houthi campaign is a part of a bigger regional threat that could escalate out from the Israel-Hamas war. The tanker hijacked was called the St. Nicholas, and satellite tracking information indicated the vessel was diverted towards Iran before contact was lost. Now, Iranian state-backed media later released a photo of the armed forces abseiling from a helicopter onto the tanker's deck, and that was something that we also kind of saw when the Houthis seized that commercial vessel near the very start of their kind of commercial vessel attacking campaign. Was what the thumbnail of this video was, which was the Houthis attacking that vessel. Now, the US seized a cargo of Iranian oil last year from the same tanker, then known as the Suez Rayyan, for breaching Washington's sanctions against Iran. Yesterday's seizure took place off the Strait of Hormuz, which is arguably the most important oil choke point. As a result of the seize, oil prices rose by up to 2%, taking Brent crude up to $78 a barrel. And we'll come to oil in the next segment of the charts, of course, where we'll be analysing that and seeing what may happen with oil. So it's so important to stay on top of all these articles in relation to world tensions, of course. Keep your eyes on that. Next to talk about, though, is the chart, where we do have, to begin with, US equities, the US 30, US indices as a whole. Now, to begin with, US 30 has reacted to this key area of liquidity that we did note yesterday when we were talking about how the US 30 was representing more of this bullish price action now, and we were kind of talking about the key areas which price might react with. And in line with that fundamental data release of US inflation coming in higher than expected, representing a more hawkish picture from the Fed, we have seen that sell off from that key liquidity level. So that was a key, sell point, I guess, as a result of that fundamental data combining with what we were seeing on the charts unfold with that key area of resistance. So it's interesting to see that sell off. What will be interesting to see, though, is whether we do start to see today whether the US and Britain's airstrikes in Yemen, or the plans at least for those strikes, whether that kind of elevated world tensions does weigh on US equities. We've seen that before, so it'll be interesting to see whether we see that now. Next to talk about, though, is the dollar, which despite the data today, we haven't seen too much take place. Well, with the data yesterday, we haven't seen too much take place with the dollar actually failing to move higher, despite the data representing what might be a more hawkish kind of perspective for the Fed. We haven't seen that kind of push to the upside. Well, we did kind of see a push to the upside, but ultimately price reacted with this key liquidity zone, which has been acting as a strong area of resistance for quite some time recently. And we did see that sell off from that level, and yet we failed to move higher from that area. It will be interesting to see though whether that's maybe because of those increased world tensions in relation to the US's strikes in Yemen. Maybe that's weighing on the dollar moving higher, as we do know that anytime the US does enter these sort of conflicts, it does weigh on the dollar, of course, as a result of adding that inflationary pressure from government spending. So definitely keep your eyes on the dollar. Next to talk about though is euro dollar, so still on top of the dollar, but this time with the euro. And basically, if I just look to my right here, where I do have like how much prices moved on the day, prices only moved 0.00%, like just a few moments ago. It has now ticked up to 0.02% on the day, but ultimately we haven't seen that greater move today on Euro USD. We did see a kind of move to the downside, then move to the upside, but it does seem that price is just continuing to react with this liquidity level that we have noted, and there's not much kind of momentum to push it one side or the other. It'll be interesting to see though whether we get whether the US's producer price inflation figure today does weigh on the Euro USD pair. Obviously, if we do see inflationary pressures for US producers as well, that adds to the overall picture, which is now changing for the Fed maybe, and therefore reinforces that more hawkish perspective that the Fed will have to take up, and that will bring Euro USD to the downside, of course, as the dollar will gain strength. Keep your eyes on it though, very important indeed. Next to talk about is pound yen, which interestingly enough did halt yesterday at the highs that were made from the breakthrough on Wednesday that we did see out of this key liquidity level. Now, obviously, price had been ranging around this kind of area since the start of December, but recently, had moved to this triple top level at the top of that range, had gained some momentum, and then broke out to the upside on Wednesday. But yesterday it does seem that yesterday did provide the time for pound yen to kind of slow down, lose its momentum, consolidate before any moves were made further. What will be interesting to see though now is, because we've now broken above, whether we will see price retrace before moving higher, or in fact we'll just see price continuing to the upside. If we do draw out a short-term fib here, that area which price did break out from is sitting on the 61.80, so maybe price makes its way down there. We'll have to see though. Keep your eyes on pound yen. Next to talk about is Bitcoin, which despite the positive SEC approval that we did hear, not yesterday but the day before, that Bitcoin is now an approved ETF kind of product. Ultimately, we haven't seen that suspected bullish momentum. We did see price spike up, but ultimately we saw a sell-off from that $49,000 a Bitcoin mark, which is interesting to see. Maybe that people had already priced in that approval, so the actual approval doesn't really make any difference to the price. And that's why on Wednesday, I think it was, in that morning briefing, I did note the fact that if we did see the SEC actually reject it, we would see a far greater reaction price-wise than if we were to see the SEC approve it, because we had heard previously that the SEC was going to approve it. And that fake Twitter post in relation to the Bitcoin ETF being approved did show that there was more momentum to the downside if it was to be rejected than if it was to be accepted. So that's interesting to see on Bitcoin. Next to talk about though is gold, which of course is in a very interesting situation because of those increasing world tensions in the Middle East. We can see price making its way to the upside as a result of that breaking news to do with the US and UK to launch strikes against Houthi rebels, and this is causing the gold to ultimately find a great deal of bullish momentum to the upside. It'll be interesting to see how far gold can hold on to this bullish momentum, and of course if we do see any escalations in the Middle East in relation to this, we will see a continuation of these moves. Next to talk about though is oil, of course, which is in an interesting position because it's currently sitting at this key liquidity zone. But obviously because of these world tensions in the Middle East, we are now seeing oil move to the upside as we spoke about earlier. So definitely keep your eyes on oil, as Iran did just seize a Gulf oil tanker, and we obviously have the Houthis attacking commercial vessels which may also be carrying oil in the Red Sea. So keep your eyes on those topics and the charts, of course. That's all to talk about on the charts. So lastly to talk about, of course, is the economic calendar, where we do have a lot of important data coming up today, but we've been talking for quite some time, so I'm going to get through it very, very quick. Now, firstly, we'll be getting Chinese inflation rate figure, as well as the Chinese balance of trade figure. Along with that, we're getting the British GDP figure and the British balance of trade figure as well. Along with that, we'll be getting British industrial and manufacturing production figures. So lots of important British figures, British economy figures coming out today. As well as that, we're getting the French inflation rate figure, new one loans, so Chinese data as well. And finally, and arguably most importantly, we're getting the US producer price inflation figure. So keep your eyes on all of those bits of data, listen out for them, and keep your eyes on the charts as well. We've got lots escalating on the world stage, so keep your eyes on those articles as well. That's all from us at Wildwood Capital, though. We've covered lots on the articles, lots on the charts, and lots on the economic calendar. Hope you have a great training day and enjoy your weekend. See you later.